Welcome, everybody, to the Chinchilla Pickin' Podcast. It is February 16th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm here with Brandon Beaver. Brandon, how are you?
I just want to say that after the Super Bowl and the halftime show, I now go by Brandon $.
Well, that's your right, man. Hey, I'll call you whatever you want. Brandon $. There you go. All right, dollar.
Gangsters, Dave.
Did you enjoy the game? Was that a good game?
Making them G's, huh?
Did you enjoy the game? You're born and raised in Cincinnati. I'm not. I moved here afterwards, so
I don't normally root for the Bengals, but I get so irritated now. These days, the referees in football have so much influence over the ends of the games. Okay. Back in my day, when I was growing up and when you were growing up, the refs let them play. There's holding, there's penalties that they can call on literally every single play if they get picky about it. There should not be a situation where it's a minor penalty and then the team gets the ball on the 1 yard line in the closing minute of a Super Bowl.
Yeah, but I mean, the Bengals did get away with one earlier in the game that led to a touchdown.
Yeah, let them play. And I mean, I no blood, no foul. Okay.
Oh, look at you! Look at you!
That's where I'm at.
Look at you!
But yeah, you need to protect the quarterbacks. But other than that, like I saw the helmet to helmet in the end zone that they called on the Bengals. I understood that. I got that. But that pass interference call and that holding call, I think it was actually a holding call, defensive holding. Oh, so stupid. Oh, it frustrated me so much.
I sympathize. So the team I root for didn't make the playoffs. So, like usual.
I mean, mine did. Mine made the playoffs, and it was a terrible first game. And the referees had a lot of influence on that one too. All season. I mean, really, like the decline of the NFL referee ever since I think it was back in 2012 when they had those high school and college football referees come out. Remember the referee strike? Ever since then, it's just been downhill. Dave, you can call me a conspiracy theorist if you want, but NBA referees were throwing games, NFL games. Why do we think that they're not doing an NFL right now? It's really, I'm getting my blood boiling thinking about it.
Brandon, I hate to interrupt, but people are here for the Chinchilla stock picking, stock and investment advice. Not football. They're not here to talk about football. Okay. I'm just saying. I enjoy your enthusiasm here. I really do. We do have a long show. That's why I'm trying to cut it off here. We do have a lot of information to throw out today. So guys, if you're listening, grab a seat, get comfy. We got a good amount of information, some good advice coming at you. A couple good calls. I'm really excited about what we have to cover. I want to hear it. I know you guys want to hear
it.
Angry. Yeah, I hear you are, but that's why I'm going first. So rules. Brandon and I get together 5 to 10 minutes before the show starts, and we tell each other what we're going to talk about. We do not discuss it here. The live discussion here on the show. I get to go first this time, probably because I'm older and I have no hair, but that's just the way it goes. First off, Brandon, I'm going to talk about NVIDIA. They had their earnings come out today, and I want to go into this a little bit. Let me throw you some numbers. Anytime we have earnings, guys, we always give you like a little bit of numbers. So top line, that's the revenue number. Top line number for the earnings was $7.64 billion for the quarter. That is up 53% year over year. The top line for the full year was $26.91 billion. That's up 61% year over year. They even paid out $399 million in dividends last year. If you were a stockholder, you got some dividend payments, right? A couple of things are, I mean, this is great, right? NVIDIA always been killing it lately on their revenue. They continue to grow year over year, much like a startup. In fact, these are startup numbers. These really are. These are a company that's in their first 5 to 10. They're in that 5 to 10 year maturing stage where they've started up, they've gone public, and now they're pumping out at 40, 50% a year. This is kind of what you're seeing here. And it's really spectacular to see this because number one, they didn't have any acquisitions, no mergers, no nothing. This is all like organic growth for the company. They really just grew this numbers and made this much in sales based off the product line they had to start the year. That's first of all amazing right there. I love that. Well, of course they improve their chips and they grow their chips and they make them better. Some things I want to point out. The gaming revenue it did beat. It wasn't as high as I thought it was going to be. It was at $3.42 billion was the gaming revenue for the year. I mean, that's a whole lot of gaming revenue. In fact, I don't even think that's here. I think that was the quarter number. I have to double check my numbers on that, but still, nonetheless, $3.42 billion in gaming chips. One thing that here's something they put out there, and I had to Google a little bit more about this as to what exactly they were talking about. Brandon, let me give your thoughts on this. Personal visualization, right? That section of the company, there's a whole company for personal visualization, and it brought in $643 million versus $579 expected, right? So what personal visualization is like when you have a game program, say back in the old Xbox Connect stage, where it could read your movements and apply it to the character inside the game. Think VR, guys. Think also not game, movies. When you're making movies in CG and you're using chips to personally visualize, these are the chips you're using. This is where it's going. It grew that by such a large amount, over 10% growth just in that section alone, which I thought was pretty cool that we're growing more and more. And I think we're going to have more and more of that. That's going to be a bigger part of the company in the years forward. All in all, I expect this to continue. I expect this to continue to grow. I expect it to continue to have organic growth, even if they do merge or buy another company, because the cash on hand, the profit margins are outrageous. Forget about it. But let's just say they go out and they do buy another company, they're going to grow even faster. They gave guidance. Here's what their guidance was for the first quarter of this year. They were expecting 7.29 billion, right? They gave guidance that it will be 8.1 billion for the first quarter of this year. So they're already saying, hey, no, your expectations are too low. We're going to kill that.
Nice.
I don't know. For me,
metaverse.
Yeah, metaverse. Personal visualization, metaverse. That's why I keep saying in the gaming. So in order to game in the metaverse, you're going to have two of these chips, right? I mean, come on, two of these graphics cards. It's a bye-bye. Back and so if you listen to our previous podcast, a lot of you guys I always say the date at the beginning. There's a reason for that, because when you give a stock and investment advice, it's always date related, what's going on at that moment. So I was buying NVIDIA, hit 300, and I said, guys, I sold out most of my position. I just kept very little for a long-term hold, right? Mm-hmm. Come January, it dropped. It came down to about 230, and that's when I came back on the podcast. I said, I'm buying back in. I think this is a great buy right here at 230. Right now it's at 260. It's still a great long-term investment. If you're looking for a short-term day trade or swing, it's kind of volatile right now. You kind of have to watch the news, time it, wait for a dip to get in. But if you're doing a long-term investment, buy it anytime right now is a good time. It's going back up above 300 eventually. The analyst came out today calling 400. I don't see 400 this year, but definitely 300.
Yeah, I don't see 400 this year either, mostly because of the rising interest rates, and I think people are gonna punish high multiple stocks for that. But I definitely think that NVIDIA will grow into its valuation for sure and go well beyond it. And so, yes, I am all for buying NVIDIA for the long term. You just got to kind of strap in and hold on for the ride. There's so many people that have so many negative opinions on the metaverse, by the way. It's really annoying to me. Why do I need the metaverse when I have the internet? You know what you sound like? You sound like the people that said, why do I need email when I have a fax machine? Why do I need a car when I have a horse and buggy? Why do I need electricity when I have candles? Yes.
Why do I need a smartphone? I remember that was a big thing. Yeah.
Yeah. Why do you need an iPad when you have a smartphone? People still bought the iPad. You have to embrace new technology. I'm going to get into a little bit of that too with my spiel that I have. But you have to embrace new technology because it's going to come, whether you like it or not. And eventually, even though you think you're going to hate it, you're going to like it. That's just how it works. And the metaverse, it's the future. So NVIDIA, yes, a buy. Meta platforms, yes, a buy. And accumulate them on the dip so people
I
like.
knew you were gonna say meta platforms, man. I just was waiting. I was waiting for that to hear that. Are you now? Honestly, just for the people listening right now, are you currently down in meta
Yes,
platforms?
yes, I am. I don't care. I'm comfortable.
Are you holding for the long term in that?
For sure. Yeah, that was always my plan.
Okay, all right.
It's going to be a center for retail. I might be wrong with the company that leads it. I think Meta Platforms is going to be a company that leads it. I think there's going to be a bunch of companies that you can get into and profit off of. But it's going to be a center for retail. It's not going to just be a video game. People keep saying, "Oh, it's just a video game." You're going to be attending live events. So there's a Foo Fighter concert coming up, I think, in the next week or two. That's going to be completely virtual reality. It's going to be on the Oculus. It's going to be a metaverse thing. These things are going to continue to happen. And, Nike's getting involved. I mean, there's all kinds of different companies that are getting involved in this because they see great profit opportunities. You're going to be able to buy something that you see in the metaverse. It'll be shipped to your front door in a day. It's not just going to be buying stuff for your avatar. If you're not into upgrading your avatar, it doesn't that's not the only thing that you're going to be doing. You're going to be buying stuff for yourself as well.
Yep. 100% agree.
Future furniture and the room that you want to outfit. And I know there's technology for that right now, but it's not up to par. It will be. It will be at your house and looking at the color of the walls and seeing what you want to paint, how things look.
Yeah. And like you brought up, there's already augmented reality. You can use it for your cell phone technology and stuff, but you're talking about going even further and scanning and really digging into it with a virtual reality headset of some sort and just planning out your whole house remodel. Yep. I firmly agree. So NVIDIA, I'm saying to buy. Brandon's on here saying Meta Platforms is a buy long term.
Yeah, and
we both have two calls. We both have two calls there.
But there aren't many.
All right. I want to.
That I'm going. There are not many high multiple stocks that I'm going to recommend in this environment that we're in. But NVIDIA would be one of them for sure for the long term.
Yeah, I mean the PE is high, but you know what? When you're growing at 50 to 60% a year over year, I mean, come on, I'll take that. I'm not worried about that. Moving on to the next thing here on the list I want to talk about. The second thing here, this one probably spend a little bit more time on. So there's a company out there called Fisker Automotive. They were on TV today talking about different things. So I gave them a look up and down the company. Their headquarters based out of California. They have manufacturing plants mainly in Europe. They're building another one in Ohio that will be open up here soon to build. What you say? What do they build in? They're building EV vehicles. So not EV vehicles, like electronic vehicles, right? So one of their newest vehicle, which is the acronym PAIR. I did not write down what it stands for, but the car is called PAIR. That's the one you have to look up. The starting price for this is $29,900. So this is clearly a shot at low cost EV market, which is very wide open. There's only one player in there right now. It's Tesla. Tesla's the only one with a low cost EV vehicle right now. And this was the last spot remaining where Tesla had a stronghold where nobody else was trying to push them around. Because Rivian's making that luxury market, Ford's coming out with their F-150 Lightning. GM has some higher priced, cars, electronic vehicles as well. This was a direct shot right at the low cost for Tesla. Now with this coming out, is this time to stop saying buy Tesla and start saying sell? Is this the final nail in the coffin? Is this signaling not necessarily the end of the company, but the end of the stock run?
It's not a final nail in the coffin. That's for sure. For Tesla, my white whale, that I could never catch. The PE has been absolutely insane. The multiple's been way too high. The stock, I still think, needs to come down and needs to come back down to earth. But it's not a final nail in the coffin. I have a good way for them to grow that I'll talk about. I mean, and it's going to be automated semis. I mean, look at the supply chain, the transportation costs that are going up right now. Companies need these electric vehicles, and they need the automated semis to move into the future. We're not there yet, but we'll get there.
Yeah, apparently everybody's testing out in Phoenix. For all we know, Phoenix is just being run by robots right now. Because every company has cars they're testing out in Phoenix. They got the Tesla has the run from Phoenix to LA, which is all they have a driver in the semi, but the driver is not steering the semi, it is automated. Then they have automated taxis going around Phoenix. They have all kinds of things happening around Phoenix. It's apparently the place to be if you are in that automated vehicle, AI vehicle.
And I understand the resistance to it with people worrying that it's going to kill jobs. And that might happen in the short term, but over the long run, what this is going to do is it's going to help companies grow. And it's going to help companies, open up more stores, more locations, things like that. It'll actually add to the economy over the long run as they're able to invest in new ventures, new technologies, and innovate more. That is actually going to add to the jobs rather than take away, most likely, at least. So, you may look at it like, oh, well, computers driving the truck now, and now it's not a human, but then that human or another human will be doing something else rather than driving the truck. And that something else will probably mean even more to the company. So,
Yeah, I completely agree. Innovation always adds to the economy and adds to the jobs, and it helps us to grow and evolve. And then I give credit to Elon Musk. He's gone out there trying to build a free internet with Starlink. He's put up solar panels of Solar City, trying to cut down dependency on fossil fuels. With that regard, he's also cut down the dependency on fossil fuels with electronic trucking and shipping, and trying to help us with our supply chain issue. We don't have enough drivers to keep the supply chain going. But with autonomous vehicles, we can do it. Tesla's leading the way at trying to solve the problems that are constantly brought up on TV. Elon Musk is trying to solve those. And I'm not trying to be partisan or anything like that when I say that. I'm just trying to point out that guys, let's let innovation take its course, and economy will handle itself.
And as a society, what's it going to do to inflation if we can cut oil out of transportation costs? It's going to keep a lid on inflation. It's going to keep our costs down.
Right.
And you're going to go to the grocery. You're going to be able to, not spend as much money on the things that you really don't want to buy, because nobody really wants to buy fabric softener. We just have to. Nobody really wants to buy detergent. We just have to, right? So if things come down in price, and all of a sudden we have more money as our, to be able to go out and spend discretionary items or other things, and we can create a whole new avenue for the economy to grow. So I'm all for these automated semi trucks, and I think it's going to be a big thing in retail for sure.
Yeah, we'll see where it goes, man. Didi didn't work out for me, so hopefully somebody else steps up here.
Politics.
I snuck out of there with the smallest profit margin possible, but it was still not what I wanted. All right, so not the end of Tesla. What we're gonna watch, I'm not buying right now. You're waiting for it to go down. I'm waiting for it to go down. I can't call a number that I would feel comfortable about. Probably about 400 for me. Given all this competition, I would like to see it stabilize around there. Maybe even 500 if there's good news. What do you think, Brendan?
Maybe.
All right. Maybe. Oh, you're not even at 5. Okay.
All right. On what the earnings reports look like, what the multiple on the stock is at that point in time, how much they're still growing. It's on my watch list for sure.
Yeah, it's always on mine. I see it every day. So those are the two things I wanted to cover. So I'm gonna hand it over to you. I know you have something big you want to cover that's gonna entertain us all and keep us interested and entertain, educational, and uplift us, right?
Sure. Okay. So I'm probably going to pronounce this research company wrong, but Deloitte, I think is how you pronounce it. And that's the only time I'll try to say their name on this podcast to save myself.
Is it Deloitte?
Oh yeah,
that's trying to say Deloitte.
That's probably it. So they asked 50 retail executives across multiple subsectors to share their outlook on the challenges retail faces in the next 12 months. And I'll post the link where you can go in and download this report in our episode's notes. Amazon forced a reimagination of retail early in the 2010s, and this is still a factor. Many stores have struggled with the change into e-commerce. COVID and the Great Resignation sped up the digitization of retail, and inflation will continue to push this trend throughout the year. Retailers are going to have to continue to digitize inventory management, their pricing procedures, their workforce management, their data analytics, and their brick and mortar customer experiences. They will need to reimagine their supply chains and their supply chain procedures as well. So according to this report, here are what the retail executives identified as the top challenges to retail in 2022. They said consumer bifurcation, which means a more challenging and competitive environment, as some consumers will want e-commerce, some will want an in-store experience, and some of them will want both. Another challenge was employee shortages that will hamper growth. 70% of them agreed with that. Supply chain disruption will impact growth. 68% agree. And consumers expect timely deliveries on the products they order. Now, other than inflation, the top three challenges for retail in 2022 and beyond come from reimagining the workforce, the supply chain resiliency, and the digital revolution. Now, with inflation eating into many retailers' already thin net margins, we need to be digging deeper. I talked about this before earlier in the year, that this year we're really going to have to dig for value and dig for opportunity in this environment. This is one of those situations. So that involves finding companies that are at the forefront of helping the retailers digitize. So I'm not going to tell you to go out and pick Walmart and Target because they're doing it the best, right? They're having to spend a lot of money on reimagining how they do things, and looking back at, you know, what are their routines, what's outdated, and what needs to change. That brings me to Cisco, who just reported earnings today. Now, these opportunities should provide Cisco with growth over the coming years. They've been predicting this landscape change for over a decade now. I don't know if you remember this or not, but I think it was back in like 2011, 2012, the Cisco CEO went on record and he gave a speech to a bunch of CEOs in the retail industry. And he said, in a decade from now, a lot of you aren't going to exist anymore. Now, we're here in 2022. We've seen the loss of Toys R Us. We've seen Sears, JC Penney still on the brink of, what are they going to be around in 5 years from now? Maybe not, you know? So there's a lot of retailers that struggled to get into this transition. Some lost, and some lost their businesses completely. He was right. He was correct about this. And he's been positioning Cisco for this change for a very long time. Now, a lot of people look at these companies like Cisco, Salesforce, Microsoft as work from home companies because of Teams, because of, you know, the collaboration software that they put out. But it's not just that. This is the epicenter, the cloud companies and these tech companies that are helping these companies digitize and move towards the future. This is the center, the epicenter of retail growth. And this is not an option. This is not something that a retailer can look at and say, well, we don't really want to digitize, so we'll go another route. It's not an option. They're not going to make it if they do it that way. So let's look into this report, because I'm calling a buy on Cisco. I bought some today, and I think that over the next few years, you can just accumulate the stock. It's an old head tech company, so you're not going to get the booms and busts like you get out of NVIDIA. You're not going to make 20% in a week on this at all. You're lucky if you get 20% in a year. But if people discover this as a company that is leading this growth, they're going to apply a higher multiple to the stock. Go ahead, Dave.
Yeah. So, I mean, all right. So I get where you're going with this and your approach here, Cisco. I'm going to let you explain it here in a minute. I know you have more to go into why you're calling Cisco here. Cisco's been flat for a while. They just recently had moved up to where they're at now, but they had hovered between 40 and 50 for probably a decade, if not longer. And they just stayed right there and they did not move. And you can make maybe the case that they were laying the groundwork for what they knew would be a digital revolution, and COVID brought that along and brought it to the forefront. I still would like to see um better use of their money than $15 billion in share buybacks. How about reinvest that $15 billion into something to help grow the company rather than share buybacks, what they announced today?
Yeah, maybe they don't. Maybe they don't feel the need to do it. As a shareholder, I love the buybacks. It provides a nice floor when people start to overreact.
Yeah, but you're talking long-term investment here, so I want some investment into the company. Warren Buffett
Well, they
always
spent the
says
last 10
he's not
years
a fan of
preparing.
he's not a fan of the buybacks either, or earnings, dividends. Dividends. He's not a fan of dividends or buybacks. He believes that you may take that money and reinvest in the company and grow the share price.
I think Berkshire buys back though. He
Do
says
they?
things like that. So I think they do. I mean,
He's
maybe.
just Warren Buffett's on record saying that, and so I don't know, man. Go ahead. I
Let's
want
get
to hear what you have to say.
let's get into the numbers here. Cisco's trailing 12 months profit gross profit margin comes in at 63.73%. That's nice. I like above 40%. So 63.73%, that meets my my prerequisite for buying into a stock. Return on equity is at 28.19%. I like above 15%. So once again, check mark in favor of Cisco here. So let's get into the earnings a little bit. Strong business momentum drove $12.7 billion in revenue. This is up 6% year over year. They also had 33% total product order growth. That's pretty good. Solid progress on business model transformation with annualized recurring revenue at $21.9 billion. This is up 11% year over year. Dividend has been increased by 3%. And as you just mentioned, they authorized an additional $15 billion of stock repurchases. Revenue came in at $12.7 billion. Earnings per share, 84 cents. And the expectation was 81 cents. GAAP earnings per share increased 18% year over year. Q3 guidance, they gave guidance 3 to 5% growth year over year. I think they're going to beat that. Go ahead.
Question for any new person in the market who wants to invest. What's the difference between actual earnings per share and GAAP earnings?
General accepted accounting principles. So it's basically what they have to report. It's their legal EPS that goes into the earnings, rather than the company may take out some one-time charges or lawsuits or whatever that they had to fight off, and that might go into their non-GAAP EPS.
So you're the GAAP earnings or non-GAAP earnings is actually after tax write-offs,
stuff like that. Yeah, stuff one-time charges. Maybe they had to discontinue a product or something, and it cost them a lot of money to do that. They might take that out for non-GAAP, and then GAAP will include all that stuff.
Gotcha. Go ahead, continue, sir.
So that's what I want to look in. I want to look at what the new retail revolution, who's going to be the beneficiaries of that. And this is something that we've been talking about for over a decade now. So it's really nothing new. It just got sped up by COVID. And then after
not Peloton.
Not Peloton, no. But then after COVID, now people are starting to look at these as stay-at-home stocks, but they're really not. They're still the future epicenter of retail growth. And this is non-negotiable for retail companies if they want to move forward, to work with companies like Cisco. And you can look beyond Cisco here. You can also look at Honeywell, Google, Intel, NVIDIA. Shopify is part of the retail revolution, even though they're their own retailer in a way. They're setting up shops for small and medium-term businesses online. Salesforce and Microsoft for the cloud. These are all companies that you can look to buy on dips and stand for the long term, because there's a lot of growth. There's a lot of growth here to be had.
There's a lot of growth here. There's a lot of good retail plays. I do believe a lot of retailers have to have some kind of digital. But here's my question: is what about companies that are making it without a huge digital footprint?
Who?
And exactly, you say who? Restoration Hardware.
So
But
I
it's
see
not. It's not
restoration
the.
hardware.
That's not a big part of their driving. That's not driving their sales, though, is it?
No, it's brick and mortar
What about? Never mind.
experience. But the thing is that they're still, even though they're not getting, as much of their sales from e-commerce, because it's hard to buy a couch and not have to pay crazy shipping on it, right? It's hard to do that with a bed frame, heavy items, stuff like that. Especially Restoration Hardware makes a lot of their stuff out of real wood, not particle board or anything like that. So it's heavy stuff, right? But they still have to digitize their customer experience in a way so that you can go to Restoration Hardware, see the products they offer before you go to the store. And beyond that, looking at their pricing procedures. With inflation being as hot as it is, the pricing has to be, in my opinion, in some way automated as well to keep up with inflation on a month-to-month basis. Digitizing their workforce management system, cloud operations, things like that. Salesforce and Microsoft to help these companies.
So that would be for any company. Salesforce helps.
Data analytics is part of it. Data analytics. Intel and NVIDIA for the semiconductors are going to be made to go into scanners and things like that.
What about Slack?
I mean, yeah. So I don't know much that much about Slack. I haven't really investigated the company that much, so I don't want to call it a buy. But yes, they would certainly have
They're just. I mean, they go right. To me, they fit hand in hand with you start mentioning like Salesforce and Microsoft in the group of helping the business grow and analytics and all that. Slack, same thing. You got SAP. That's another one that helps businesses. I mean, there's a lot of companies out there you can look at and you can invest in. You can actually create a watch list just of companies that work behind the scenes. Yeah. And do this. Now it's not just retail though. Those are involved in all kinds.
Sure.
Yeah,
but you mentioned Restoration Hardware, and even though you may not be going to rh.com to buy your products, that company's still going to have to make their processes more efficient, and that involves digitization of their routines and things like that, make them faster because they have to beat out inflation. Inflation is making this so much more important right now to be more efficient and to be able to do things quicker.
Gotcha. So what retailers are you looking at then? And in all of this, is there any retailers that you are looking at or you're making a call on or maybe you have added to your watch list or anything?
No.
None. So after all this research, you still don't have one on your watch list. So is retail a good play then?
No, but the companies that are going to assist these retail companies with going into the future are Cisco.
That's your play. Gotcha.
Cisco's my play on this. So
Cisco's your play.
And Honeywell.
Really? Okay.
Makes the scanners.
Yeah.
That everybody needs. We're all using them now, but they're going to need more of them. So you're receiving
Cisco and Honeywell.
Any company that is helping with transportation costs, receiving procedures, workforce management, during the Great Resignation, all of these companies are very, very important right now. Supply chain solutions. I can go on.
Gotcha. So Workday, Slack.
We'll do one of them. Yeah. Now I caution on high multiple stocks right now, but you buy them on dips. And what you could do is you could look at, what's the average price to earnings ratio and maybe even take 10 to 15% off of it or even 20% off of it. And then just keep it on your watch list. And if it hits that, then you buy it.
Bam, right there. Brandon just told you how to price these in. It's no buy price. I love it.
Well, with Cisco right now, it's trading at just a price to earnings ratio just under 20, and I'm all for that right now. I honestly think that a lot of good companies, Cisco included, when they put out their guidance, everybody just kind of expects that their guidance is going to be low, and they'll beat it.
I mean, are you worried that Cisco with the PE will turn into a Micron? Micron technology, where
It had
no
been,
matter what the stock price is, the
it
PE
had
is
been,
always the same.
it had been a Micron for a very long time. As far as, I mean, it wasn't a PE of like 5 or anything, which is where Micron wanted to stick at for a long time. But it, me and you've talked about this over and over again. Didn't matter how good their earnings were, the stock moved nowhere. It did nothing for such a long time, and then it would take it, a big bump up, and then it would just come right back down to earth. Um, and me right now, having more experience, I wish I could go back 5 to 10 years from now, earlier in the past, and tell my previous self, just buy and start accumulating Cisco. They're making the right investments. They were making the right investments to set them up for the future, and have patience with it. Like I said, it's an old head tech company. This is the old guard of tech. It doesn't get as much attention as Apple. It doesn't get as much attention as NVIDIA, but it is a slow but sure kind of thing, as sure as you can get in the market, I think.
All right.
It's had brilliant leadership. I'm a big fan of Cisco, and this is the first time I've bought into it in a very, very long time today.
Well, there you go, man.
With all of the uncertainties you have in the market right now, if you pick a long-term security to buy into, like I did with Meta Platforms, you just have to ride this craziness out. And what I want people to do, don't look into what you think. If you're buying long-term, don't look at what's going to happen in the next week. You need to think past it. So the supply chain situation, I still think the supply chain situation is temporary. It's gone on longer than we all thought it would, but I still think it's temporary. So look beyond the supply chain situation. There are millions and millions of dollars of orders and backlog for Cisco right now, because they're having a little bit of trouble with keeping up with the demand. That's a good problem for a company to have, right? When the supply chain situation clears up, they'll have even more revenue.
Same with all the chip makers. Yep.
Look beyond that and buy it because of it.
Gotcha. All right. Are we ready for final thoughts?
Sure, go ahead.
All right, man. Final thought for me is NVIDIA. I still love it right now. I'm going to continue to love it till about 300. Then I might sell out again and take my profit again, and enjoy those profits. But yeah, I'm loving it right now. As far as Tesla goes, hey, I'm not calling to buy right now. I'm not going to day trade it anymore. I'm going to wait and see what happens, watching it, not really going into it. I always like to give people an update on oil. I know last podcast I said if Russia invades Ukraine, oil will shoot up. Russia has not invaded Ukraine, so therefore oil dropped, because everybody thought this is going to be ended diplomatically, which is a good thing. So
hold on one
go
second,
ahead.
because I think that was an overreaction for the drop. Because yes, Russia came out and said that they're withdrawing troops, but NATO's been monitoring the situation and said no, they're actually building up their troops along the Ukraine border. They lied.
Well, I just said they haven't invaded yet, so therefore oil has gone down. It might be a time to buy if you believe that that's gonna still happen. But then you're basically almost gambling at this point on what Putin's gonna do. So
yeah,
I would rather stick to fundamentals and let that guide me. So as right now, I'm not calling any buys on oil after this drop. I'm just sitting and watching, seeing what's going on. Plus, we added 2 inventories this week. We added 1.1 million barrels to inventory, so we're growing our inventories again. Good to see that. That's all my final thoughts, Brandon.
You know what? It's going to be a wild year. It's been a wild one already. I was just looking at the interest rate on the 10-year, and last month it was at 1.6%. 30 days later, 40 basis points later, we're now at above 2%, which is actually where I expected us to be December 31st. I was, a month and a half or 2 months off of that prediction, but we're at 2% right now, 40 basis points more. That's going to keep causing stocks to roller coasters. So you have your long-term investments, you buy them on dips, you accumulate them. You can even use the list that I published on chinchillapicking.com as a guide on how to grade stocks, things like that. If you've got a good investment that you you really believe in, you strap in and you don't get discouraged, because it's going to be a wild ride. There's going to be a lot of value lost, and there's going to be a lot of it gained again. So we'll see where we go from here. Just be careful.
There you go, guys. Thanks for listening. As always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.